So, how can fintechs improve and broaden their banking relationships? The problem? Differences in corporate cultures and compliance resources and emphasis. Banks are heavily regulated by multiple bodies like the Federal Reserve, the Office of the Comptroller of the Currency, among other federal bodies, plus state banking regulators. Banks have all kinds of rules to contend with, including rules governing their capital reserves, consumer protection, anti fraud, and anti money laundering rules. By nature, banks are going to be more conservative, less technology driven, and slower to adopt to new products and services than newer, more technology focused companies. Fintechs, or financial technology companies, are the new front end of banking. They move faster and are more innovative, yet may lack the deep experience with and emphasis on things like compliance and regulation. A fintech is going to come more from a move fast and break things mentality rather than taking a wait and see attitude. In reality, what we need is the best of both worlds. Traditional finance offers products that are familiar to most people and have built in consumer protections. If someone steals your credit card, for example, and racks up a bunch of charges, chances are that you'll have the ability to get some or all of your money back if you catch the problem quickly and let them know if they don't let you know first. The downside is that traditional finance is slow and bureaucratic, often requiring you to jump through hoops that makes no sense, like going through a full source of funds examination over a routine $5,000 wire, or just shutting down your account for reasons unknown and never offering you an explanation. Fintechs serve the public by offering faster, more efficient solutions to people who just want to use, move, or store their money by implementing newer technologies such as cryptocurrency based solutions and payment rails. Fintechs make things easier and faster and can serve more people by leveraging these technologies and the internet. That said, fintechs might find the traditional finance world to be a bit of a maze when it comes to financial services compliance and the like. Like many startups and newer companies, fintechs lack the history and maturity of their banking peers. Customer service might be spotty. They might be acquired and end up changing their whole business model or personnel, or they may simply go out of business, leaving their customers in the lurch. So, on one hand, you have something predictable but slow, expensive, and inefficient. On the other hand, you have something that is innovative and refreshingly easy to use, but subject to change at any moment. I personally believe that human nature dictates that change is more effective and long lasting when it happens incrementally over time. We lived through the Wild West days of crypto, which saw the birth of these new technologies despite TradFi and the US government fighting it tooth and nail. Unfortunately, that phase ended in spectacular failures with the likes of FTX and Celsius going down in flames for fraud and a total lack of common sense. These failures not only came from these companies' executives, but also the VCs and other investors who failed to do their homework and let charm or greed blind them to their responsibility to do ordinary due diligence. Now, here we are in phase two, in which we see the fusion of traditional finance and fintech innovation. The regulatory and legal climate has changed dramatically, especially in the United States, where crypto is no longer public enemy number one. These changes are unlocking opportunities and a greater willingness on the part of banks to work more with crypto customers and partner with fintech companies. At the same time, fintechs are getting their houses in order, paying more attention to things like anti money laundering and other types of compliance issues. They're getting better legal advice from crypto native attorneys like myself. They're taking their time to integrate more smoothly into the world's financial system in a responsible way. This means that today's fintechs are more likely to stick around. They're building more familiar products and services that can make consumers more comfortable, since really most people don't care about how something works. They just want what works and they want what they understand. The evolution should and will continue. I'm Ari Good, a crypto lawyer with experience helping fintech companies understand the changing world we live in and plan for success. Contact me to learn more.